What's up everyone? I hope you guys all had a great week in the stock market last week and a great weekend. I have a very exciting video today. I'm going to be going over one stock. So make sure to drop a like on this video, subscribe to my channel if you haven't already. Without further ado, let's get right into the video. Alright, the stock I'm going to be talking about today is Planet 13 Holdings, ticker symbol PLNHF. I'll put that on the screen, it's kind of a mouthful. And this is a cannabis company with their primary location in Nevada, in Las Vegas. And it's a pretty interesting company. I'm going to be going over the fundamentals, technicals, and the whole overview and play on the stock. And yeah, it's a bit of a tricky one. There's not really a cut and dry answer to this. So we're going to cover it all. Alright, so first off, Planet 13 owns the largest cannabis store in all of Nevada. It is in Las Vegas, like right from the Las Vegas Strip, so it's in a very, very nice location. Planet 13 Holdings was actually the winner of Leafly's 2018 Cannabis Store of the Year, so that is something to mention. They have won a few awards for their store because it is a pretty unique store. It's not just like a regular dispensary. The store offers a customer experience focused on entertainment, buying cannabis, and enjoying it in the store. So it's kind of unique, very different than other cannabis stocks that we've talked about in the past, or I'm sure you guys have seen in the past. They really focus on not only selling it, but really selling the whole experience inside of this one store. So it's kind of like a massive shopping mall for cannabis. And then there also are areas where there's like couches and sofas and TV rooms and stuff like that, where you can kind of like test out the products and enjoy it and stuff like that. So it is a pretty unique venue and type of store. Also, it is based in Las Vegas, as I said, so it is a pretty primary location for this type of store. Also, they are looking to expand this year. They're going to be opening up their second store. That's going to be massive for this company, really helping out their revenue growth and just their growth as a whole company. Opening up a second location is really going to help out with everything, and it's going to be great for their stock as well. All right, let's jump into the fundamentals. So their market cap is about 1.2 billion. Putting this as a small cap company basically means that they're still a very small company in their infancy stages of growth, which can be a good thing. It also can be a bad thing, basically meaning that the company is not very developed. It has not really proven itself over the long term, so it is riskier, but there also is more room for growth, especially in this sector. Their quick ratio is 12, which is pretty good. It means that they have enough current free cash flow to pay off all their short-term debt. So it's good to see in a company. Does not mean all their financial health is perfect, but it is a pretty good thing to see. Sales growth increased by 204% last year. This is amazing. This shows that their revenue is increasing very, very quickly. This was actually during 2019. Because they didn't have stats for last year. So that's very good to see. This shows that this company is increasing their revenue and their sales, and you always want to see that in a company. Earnings per share grew by about 54% last year, which is also amazing. And their expected earnings growth are about 114% in the coming years, which is pretty incredible as well to see. You love to see it. Over 100% is pretty incredible for earnings growth, especially for such a small company. That's definitely something you want to see. Their EBITDA growth was about 192%. I'll put that on the screen so you can look it up, do some more research if you want. But that was about 192% last year, which is absolutely incredible. This basically measures their financial health and operating performance. This is a key indicator or stat that you want to look up when you're measuring a company's financial health, and this company's EBITDA is looking very good. Alright, let's check out some of the downsides for this company's fundamentals. Those were all pretty good, the ones I just went over. These are some of the negatives that should require some more consideration when investing in this company, make this company's stock a little bit less desirable. So first off, 85% of this company's shares are held by the general public. I do not like to see that. I would like to see institutions and insiders holding way more, because as we know, the general public knows way less than insiders or even institutions, because those are professional analysts making those decisions. So 85% is just the general public, showing that the stock is probably hyped up and overvalued at its current price. So that is definitely something to consider and not something you want to see in a company. Also, insiders have only sold shares in the past 3 months. That is really not good. Shows that the people that know this company the best are basically have a bearish outlook on it, at least the last 3 months, and they've only been selling shares. Does not basically mean that they think this stock is going to go to the ground or fail. That's not what this means at all. But it shows that they might think that the stock is overvalued right now, or they see a dip in the future. We're not sure exactly, why they're selling their shares, but it's definitely something to consider because they have not been buying shares at all the past 3 months. Not only that, but return on assets are about negative 7%. This company is not profitable yet. That's also something to consider. Since it is in its infancy stages and it is a small cap company, that's not really a major downside. I invest in companies all the time that do have negative return on assets, but it's also something to consider and something you want to look at when you're investing in a stock. Their price to book ratio is about 10 as well. This is not good. You want to see a price to book ratio of under 1. That is another downside for this company's stock. Alright, we're going to jump into some of the technicals now that I've gone over the upsides and downsides of all the fundamentals and the overview of this company. Alright, so as we can see, this is the 3-hour chart for PLNH, Planet 13 Holdings. And right now, this is basically the last, or this is all of 2021 so far on the screen right here. So as you can see, the technical setup right now is not good at all. I would not want to put my money into it, basically where it is right now. I think this stock will fall a bit more. Right now it's sitting around $6.9 per share. I think we can see the stock fall all the way below $6, maybe even to the low fives, depending on what happens. We do have some support right about here, right about 5.7. So if it does break that, I think we're going to see the stock fall a lot more. If it doesn't, it could bounce off of that in the short term. That could be an opportunity. And you might be thinking, why am I going over this stock that doesn't have an amazing technical setup or perfect fundamentals? And on this channel, I want to be completely transparent and not just go over stocks that are amazing buys. And I don't want to just hype up, perfect stocks. I want to really show you guys stocks that I think can be great in the long term, but help you guys do your own due diligence on them, and make your own convictions on plays. So I think this is definitely a stock that could be a great opportunity. I know I have some of my money into it. I invested in it a while ago, but yeah, I want to show you guys stocks that could really go either way in the long term or short term, and help you guys to make your own convictions and not just pump up stocks like the other YouTubers and just go buy. So yeah, in the short term, I do see this falling a bit more. Let me know what you guys think in the comments. I would love to hear your arguments for a bullish or bearish outlook on the stock in the short term or long term. As you can see, we do have some support right here, as I said, and some resistance levels right up here that it bounced off of. Let's see, so we have a level right about $7.3 per share, and we had this little channel a while ago, kind of going from, let's see, early February, from about February 10th, which was basically when the markets kind of started turning. We started seeing the rotation from hype stocks to, or growth stocks to kind of value plays. And that goes in alignment with, this company, since it is kind of a hype or growth stock, not really a value stock, and it is a small cap. So right about then, we did start seeing it kind of fall into this channel, this downward channel, all the way until it really crashed down in early March. Oh, my computer's low battery. So yeah, right now the technicals don't look amazing, and my opinion on the stock would be, I would love to snatch this up at below $5 per share, either the low fives or high fours. Low fours would be amazing as well, and I think we could see a dip in the future. I'm not really sure where we see this stock going in the short term, since the rotation is still kind of happening in the stock market, and normally this quarter is when we see lots of earnings coming out for bigger S&P 500 stocks and stuff like that. So those stocks will probably be performing better in the short term, and stocks like this might not be. Also, the cannabis sector is not really hyped up right now, so we could kind of see the stock present us with some nice opportunities and dips to buy off of. Yeah, so that's going to be it for this video. I hope you guys enjoyed. I hope you guys learned something. And drop a comment. I would love to hear you guys' due diligence on the stock, as I said, whether you have a bearish or bullish outlook. I'd love to hear it. So yeah, let me know in the comments. I hope you guys enjoyed this video, and I will see you guys next time. Peace.